Hello guys, very good morning, good afternoon and good evening for all of you. Hope you guys are doing good. So welcome back. In this video, we will be starting with chapter 2.3 guys, which talks about value of supply. So we have already covered chapter 2.1 and chapter 2.2. Chapter 2.3 covers the value of supply concepts. So even this chapter or this concept, that is value of supply, is a part of chapter 2 for you as per ICSI study material guys. Clear? But I have made it as chapter 2.3, separate chapter. Fine, we'll start with guys. Come to the notebook where you have written the section number, that is at the beginning of your notebook. I think you would have written 6 till section 14 for CGST Act. Come there guys. Come under CGST Act quickly. So I will be giving the section which we will be covering in this class, and then we will start the explanation. Come there. Yeah. So till 14 you have written. Now section 15. Next line you write 15. And in content, value of supply. Value of supply. Clear? Yes, sir. And there is no separate provisions for value of supply or time of supply under IGST Act. Clear? So whatever value of supply we have covered in our previous class, that is covered in section 12, 13, 14 of CGST Act. And now today we would be covering the value of supply as per section 15. This remains same whether the supply is intrastate supply or whether the supply is interstate supply. Clear? In actually, there is a section called section 20 in IGST Act. There they are told whatever provisions is not separately covered under IGST Act, then whatever is covered in CGST Act as it is applicable under IGST Act also. Clear? I repeat, in section 20, which is a common section which will tell whatever provisions are not separately covered under IGST Act, with respect to that, whatever provisions are covered in CGST Act is as it is applicable. So time of supply provisions, value of supply provisions are not separately covered in IGST Act, because whatever we have studied under CGST Act as it is will be applicable even in case of interstate supply guys. Clear? Yes, sir. Chalo, we'll get into the topic now. Value of supply. Now, till now we have learned what is supply, what is goods, what is services. So if there is any supply of goods or services, then it is taxable under GST. And we have also seen negative list as per schedule 3 and also exempt goods and services as per section 11 read with notification. So these two things are not taxable. So from the supply, if I remove these two items, the remaining all other things are taxable. Clear? Yes, sir. Then we also learned in section 9 who is liable to pay tax. Who is liable to pay tax? Whether the supplier, whether the recipient, or in 3 special cases, electronic commerce operator as per section 9.5. Then coming to section 12, 13 and 14, we also learned when the supply has taken place. When the supply has taken place. Now we have decided who is liable to pay tax, when we are liable to pay tax, now on what value we are liable to pay tax, because whenever I am paying tax, there should be some amount on which tax should be calculated now. Agree? For example, in income tax we calculate or we apply the tax rates on what? Total income. Agree? So how to calculate total income is given in the Income Tax Act? Yes. So first calculate the income under each and every head separately, then say give clubbing provisions effect, then set off and carry forward of losses, then whatever deductions is available under chapter 6A, claim it, you will get something called as total income. On that, whatever tax rate is applicable for you, apply and calculate your tax liability. Similar to that, so I got to know when am I liable to pay tax, and I got to know who is liable to pay tax, whether supplier or recipient. And now we will decide on what value we are liable to pay tax. Clear? That is on what figure or on what amount GST rate will be applied. Because see, depending upon what goods or services I am supplying, I know what is the rate applicable for my goods which I am supplying. So now I should decide what is the value. And see, value decide, sir, it is very easy now. Whatever amount the supplier is charging to the recipient, that is what the value of supply is. On that only GST would be levied. But here under section 15, they have covered some separate provisions also. For example, please pay attention. Now, I am the supplier, you are the recipient. I am charging 1 lakh rupees. I have supplied some goods to you. I have charged 1 lakh rupees to you. Normally, this is what the value of supply in maximum cases, and we pay tax on this. Agree? But under section 15, they have also covered few points telling, they have given clear clarity. What is value of supply? Okay, we call it as price. This is what the price the supplier is charging to the recipient. Now, sometimes what happened? Assume, please pay attention. Supplier is liable to pay some amount to the other person, third party. Let me take to third party. So supplier was liable to pay 10,000 to third party. So what supplier did was, a recipient, you pay it to the third party. I am liable to pay, but you pay that amount. So indirectly, recipient paid totally how much? Not only 1 lakh, it is 1 lakh plus 10,000. 10,000, you would have not paid it directly to the supplier, but still, it is for the goods which he is purchasing. So supplier, what he told, I will issue invoice for you for 1 lakh. Okay, there is an adjustment between supplier and recipient. You pay me directly 1 lakh, whereas the remaining 10,000, I am liable to pay to someone from whom I am purchased some goods. You pay it directly. So in that case also, the 10,000 is like indirectly paid to supplier only, na? So this is also included in the price of the goods. Yes. So it has to be added to the value of supply. Okay. One thing, that is the supplier's liability paid by the recipient. Next, recipient, when he has purchased the goods, he has requested the supplier to pack the goods in a box and send it to him. Yeah, because it is a delicate goods. So what the recipient has requested is, supplier, please pack the goods and send it in a box securely. So for that, the packing charges, the supplier is charging some packing charges. How much? 20,000. For all the goods, whatever he is sending, he is packing individually and sending it to the recipient. So separately is charging packing charges. So should it be added to the value of the goods? Yes, sir. Why? Because see, supplier, before the goods are delivered to the recipient, if he is charging anything in any name, let it be in any name, packing charges, design charges, then anything, commission, anything which the supplier will charge it to the recipient before the supply or at the time of supply, has to be added to the value of supply as per section 15. Clear? This, whatever I am explaining is what is covered in the provisions. We will go through the provision later, but try to understand. I am trying to explain it with an example. Clear? So simple, anything which is charged by the supplier to the recipient before or at the time of supply has to be added. Clear? Okay, sir. Next, next, any tax other than GST, any tax other than GST, if by chance it is charged by the supplier separately to the recipient, like municipal tax which is levied by local authority, or any tax like that other than GST, because now we are calculating the value on which the GST has to be levied. So don't add GST. If there is any other tax, duty, cess which is charged not under GST, under any other law, in that case you will add that also. You will add that also. So assume there are some tax like municipal tax or any tax which is charged by the local authority, not under GST, separately under different act. So even that has to be added. Clear? Okay, sir. So how much? 1,35,000. 1,35,000. So we call this as value of supply. And supplier is liable to pay tax under forward charge, means supplier will pay tax on this. Or even in case of recipient, if recipient is liable to pay tax, he will pay tax on what amount? 1,35,000 into GST rate. And value of supply, section 15 doesn't talks about reverse charge, forward charge. Whoever is paying tax, they have to pay tax on this value. That's all. Section 15 is very clearly telling, we have, means whoever is liable to pay tax, whether supplier or recipient, whoever it is, pay tax on the value which is given as per section 15. Clear? One more point is there, that is, if two more, okay, special points. Okay, this three are the normal points, like anything which supplier is liable to pay, if he is asking the recipient to pay it, okay, that is liability of supplier paid by recipient. Next, any incidental expenses which is charged by the supplier to recipient before or at the time of supply is called. Clear? So you would have learned in your accounts and all, there is something called as AS2, Accounting Standard 2, which talks about valuation of inventory. So there it is given any cost which is incurred to purchase the goods plus to bring that goods to their present location and condition has to be included in the cost of inventory. Same thing how to do it here. So what is the cost to the recipient? 1,35,000. We have to take that, and on that we are supposed to pay tax. Clear? So the supplier would have charged the amount in different names. For goods he is charging 1 lakh, then some expenses is asking the recipient to pay, then some packing charges 20,000. No problem. What is the ultimate cost to the recipient? Take that, on that you are supposed to pay tax, like that. Clear? Yes, sir. Next, 5,000. This is an example where, sir, if any tax other than GST, if it is charged by the supplier or any authority to the recipient, then even that will be added to the value of supply. Fine. These three are normal item, especially the first two one, 10,000, 20,000 example. Then two more special things are there. That is, assume supplier has sold the goods to the recipient and he has supplied the goods for 1 lakh. No other cost. He is not charging anything extra here. Okay, sir. But supplier has told recipient, you need to make the payment within 30 days. If you don't make the payment within 30 days, then I will charge you an interest of 5,000. Okay. So should it be added to the value of supply? Assuming recipient has not made the payment within 30 days. He made the payment after 30 days. So in that case, should we add the interest to the value of supply? Yes, you have to add it. So in that case, what is the value of supply? 1,05,000. But this 5,000 can be considered in two ways, guys. Two ways. Please pay attention. That is, in maximum cases, we consider 5,000 as inclusive of tax. Because when when supplier is charging interest to the recipient, he will not collect like, okay, interest plus GST given them. So normally 5,000 will be considered inclusive of GST. Clear? So inclusive of GST. In that case, what we will do is, please pay attention here. Please pay attention. 1 lakh is the amount which is charged. Then for GST, 5,000 is inclusive GST. So let us assume the GST rate is 18%. So this is 118 into 100. If you do, you will get what is the value part. You will get what is the value part. Add that here, you will get 1 lakh change. Means 1 lakh plus value of supply. Clear? So normal situation, that is in maximum situation, what you do is, if by chance, if there is any interest charged by the supplier or any interest fee, penalty, anything which is charged by the supplier to the recipient for the delay in payment, we have to add it to the value of supply. But how much? Should we straight away take the amount, or should we do any calculation for this? If you assume it as inclusive of GST, then you need to do the cross calculation like this, or else. If you assume 5,000 is exclusive of GST, that means on this 5,000 also, separately GST would be charged. This is how you will calculate. 1 lakh is for the goods, 5,000 interest, straight away take. On this, the supplier is liable to pay 18% GST, like that. Clear? So for interest, both the options are open, but I suggest you to always consider for interest part. Okay, that is the addition part. What is the value you have to take while calculating the value of supply is, always assume whatever interest is charged is inclusive of GST. Do the cross calculation, that is interest amount divided by 100 plus GST rate into 100. You will get what is the value excluding GST. So add it to the value and get finally the value of supply. Is that clear? Yes, sir. So in simple, just let me just brush up this. If any interest, late fee or penalty which is charged by the supplier to the recipient for delay in payment by the recipient, then it has to be added to the value of supply. But two options are here. There are two options for this. That is, you can consider that interest as inclusive of GST or exclusive of GST, and accordingly decide what amount has to be added to the value. Clear? So I suggest you to take, if there is any interest in the question, always take it as inclusive of GST and give a note for it. Okay, we will do the problems. We will do the problems on this. Is that clear, guys? Yes. And you know, what is the time of supply for interest, late fee, penalty as per subsection 6. Subsection 6 of 12 and 13. Board tells the same thing. If there is any value addition in the form of interest, late fee, penalty which is charged by the supplier to the recipient, the time of supply will always be the date on which it is received. the date on which it is received. I'm just trying to connect to provisions. Clear? Yes, sir. Next, one more example. Now, supplier has supplied the goods to the recipient for 60,000. 60,000. But the goods are worth 1 lakh. Why the supplier is sending the goods to the recipient only for 60,000 is the supplier has received some subsidy from whom? From NGO. NGO has given a subsidy of 40,000 to the supplier, telling, a supplier, you supply the goods to the recipient, which is a charitable institution, only for 60,000, or let us take it as a school. You supply this goods, assume the supplier is supplying some stationery items. You supply the stationery items to the school, government school, only for 60,000. Remaining 40,000 I will give you as subsidy. So this 40,000 is linked to the price. That is why the price has been reduced to the recipient. Agree? But to calculate the value of supply under GST, what is the price charged to the recipient? 60,000. Plus, if there is any subsidy received, which is linked to the price, the prices of the goods has been reduced. Why? Because the supplier is receiving some subsidy. In that case, add that subsidy. So what is the value of supply? 1 lakh. Because supplier totally is getting 1 lakh only. Might be 60,000 from recipient and 40,000 from NGO. No problem. What is the total amount supplier is getting? 1 lakh. Take value of supply as 1 lakh. Clear? So I repeat, if there is any subsidy received by the supplier, which is directly linked to the prices of the goods or services, then that subsidy has to be added to the value. But if the subsidy is given by central government or state government, it should not be added. I repeat, if the subsidy is given by central government or state government, even if it is linked to the price, don't add it. Don't add it. Yeah. Yes, sir. Thus, whatever provisions I discussed now, that provisions are given in all 15 subsection 2, guys. Whatever things I told you, there are totally 5 things which you can add as per section 15.2. Okay, so I have covered all those things here. Let me tell one by one. Simple guys. Taxes which is levied other than under GST. Okay. Next, liability of the supplier which is paid by recipient. Yes. Then any incidental expenses which is charged by the supplier to the recipient before or at the time of supply. Okay. Then coming to the 4th one, interest, late fee or penalty charged by the supplier to the recipient for delay in payment. Okay. Then the last one is subsidy. The subsidy received by the supplier which is directly linked to the price other than the subsidy received from central government or state government. There are totally 5 items. Clear? Yeah. Now pay attention. There is one more provision given in section 15.3. 15.3. So discount. 15.3 covers discount. So under discount, there are 2 things. 15.3a, 15.3b. Hello, guys, please pay attention here. So 15.3a will tell if there is any discount which is given at the time of supply. Okay, at the time of supply and recorded in invoice. It is recorded in invoice. For example, you came to purchase the goods from me. I am the supplier, you are recipient. So for supply price, I am charging 1 lakh. And you are my regular customer. Or else during summer, I am giving discount. So I am recording a discount. Trade discount, we call it as at 10%. So which is 10,000. So how much are you paying for the goods? Only 90,000. So that 90,000 will be the value of supply, guys. So what is the value of supply? 90,000, on which supplier is liable to pay the tax. Fine. Chalo. So what 15.3a is telling is, please pay attention. If there is any discount which is given by supplier to the recipient at the time of supply, and if that discount is recorded in the invoice which is issued by the supplier to the recipient, then it can be reduced from the value of supply. It can be reduced from the value of supply. If there was no discount, then the value of supply would have been 1 lakh. But now what is the value of supply? Only 90,000, on which the supplier is liable to pay tax. Clear? We call this discount as trade discount, guys. That is the discount which is given at the time of supply itself. Clear? Yes, sir. Next, coming to 15.3b. This is a bit challenging. That is, this is the discount not given at the time of supply. It is not given at the time of supply, but agreed at the time of supply. It is agreed at the time of supply. That is, I have told you, you are the recipient who has come to purchase goods with me. I have told you, you have purchased the goods for 1 lakh rupees. I have told you, I am not giving any discount now, but I have agreed that if you pay me within 10 days, I will give you 10% discount. We call it as cash discount. I will give you 10% discount. Please pay attention. I have supplied the goods to you today for 1 lakh rupees. Today I am not giving any discount for you. You have made a credit purchase. I have told if you pay within 10 days, then you will get 10% discount. If you pay after 10th day, that is from 11th day, if you pay, you will not get any cash discount. So this discount was agreed at the time of supply. Okay. Now I have issued invoice for how much? 1 lakh only. But at the bottom or at the back, I would have disclosed. If the payment is made, it is a note. Okay. If the payment is made within 10 days, then a 10% discount can be availed on. I would have given just a disclosure. Agree? So it was agreed at the time of supply. Okay. Now, so if some conditions are satisfied for this supply, for this discount, even that can be reduced. For example, now it was agreed at the time of supply. Okay. It was disclosed in the invoice that, okay, if the payment is made within 10 days, you will get a discount. Okay. It was agreed and known at the time of supply. Then invoice I have issued for 1 lakh. Now assume if the payment is made within 1 lakh, I cannot go and scratch the invoice and tell 90,000 anta. No. So if there is any discount which I am giving after the supply, the supplier will issue to the recipient something called as credit note. Credit note for how much? How much discount I am giving? Assuming you have made the payment within 10 days. So how much discount I will be giving you? 10,000. So I will issue a credit note for 10,000. And on this 10,000, how much is GST? Assuming GST rate is 10%, 1,000. 1,000. So totally 11,000. Why? Because when I am issuing the invoice, I would have issued the invoice for 1 lakh plus GST at 10%. Assuming the rate of GST applicable for my goods is 10%, 10,000. So totally I have issued invoice for how much? 1 lakh 10,000. Okay. So now as you are paying within 10 days, I am giving you a discount of 10,000. 10,000 here is GST. Okay, let me make it as 18,000 at 18%. So here also 1,800 because you may get confused. So now I have sold the goods for you for 1 lakh plus GST 18,000. So 1 lakh 18,000 is the invoice price which I have charged for you. Okay, sir. Now you have made the payment within 10 days. So I am giving you a discount of 10,000. Agree? So in that case, I cannot ask you to bring the invoice. I will scratch and give and I will record the invoice. No, you cannot change anything which is recorded in the invoice now. So what you will do is for the discount, whatever you are giving after supply, this is after supply, right? So in that case, you will issue credit note to the recipient. What? Credit note. For how much? What is the discount amount? 10,000. On that discount amount, what is the GST component? 1,800. So you issue a credit note for this much. You already issued the invoice for higher value. Now you have to reduce the value. For that short amount, you will issue what? The credit note. Okay. Who will issue? Supplier to recipient. So what they are telling under section 15.3b is you have issued a credit note to the recipient and the recipient has to reverse this ITC. Means if he has already claimed ITC of 18,000, who? Recipient. If the recipient has already claimed 18,000 ITC, that is input tax credit on his purchases, he has to reverse this 1,800 because the government will not get this revenue because you are getting the you are giving the discount to the recipient. Agree? So in that case, after considering all this, what is the value of supply? It is 1 lakh minus 10,000, which is discount. So what is the remaining amount? 90,000. So on this 90,000, 18% GST has to be paid. 18% GST has to be paid. Agree? Which comes to 16,200. Agree na? So, but if you have already paid 18,000, if you have already claimed 18,000 ITC, you have to reverse 1,800. Who? Recipient. Because literally at the end, how much the recipient is paying in the form of tax? Only 16,200. 16,200, that is on 90,000. Which is on 90,000. Hope you guys got the point. Yeah, they will not ask so much complicated question, but I'm just trying to tell the condition which has to be satisfied. So with respect to the discount which is given after supply, the recipient has to reverse the input tax credit. Only then the supplier can reduce that from the value of supply. Clear? Sir, what if 18,000 tax is already paid to the government? In that case, whatever excess amount 1,800 you have paid, because discount is given after. What if the supplier has already paid this tax to the government? He can adjust 1,800 in the next month. Clear? Means whatever excess amount you have paid, you can adjust that amount in the next month. Okay, or else you can also claim a refund later. If by chance if you are not able to adjust, the first priority is you can adjust it in the upcoming months. In the upcoming months, that is in the next month also, you will be supplying something to others on which you are liable to pay GST. So assume in the next month you are liable to pay 1 lakh GST. So on that 1,800 you will adjust and pay only the remaining amount. It's like that. Clear, guys? And with respect to what is credit note, when exactly it will be issued, there is something called as debit note also. We will be learning about this in detail in invoice topic, guys. Clear? There is a separate topic called like tax invoice, credit note, debit note, e-way bill and all. We will be learning it in the further classes. Fine? Sure. So whatever is required till now, I have explained it. I have covered it. So coming to 15.3b, I repeat, if it is agreed at the time of supply, but given after supply, this discount was agreed at the time of supply, but it is given after the supply. So can it be reduced from the value of supply? Yes, provided certain conditions are satisfied. That is, the discount whatever is given should be linked to supply, which has already taken place. So supply has already happened in the past. Discount is given in the later part. So in that case, whatever discount you are giving, it has to be linked to some invoice or to some supply. When? So this 10,000 discount has to be linked to this invoice. Okay, this discount is with respect to which supply? I should be able to link it, because for every invoice there will be an invoice number. Okay, so supplier should be able to link the discount to a particular supply which has already happened. Okay, plus the recipient, if he has already claimed full input tax credit, he has to reverse to the extent of the GST which is applicable on discount part. On the discount part. Yeah. So how much GST is related to discount part? Discount is 10,000. On that GST is 1,800. So if the recipient has already claimed full 18,000 input tax credit, then he has to reverse to the extent of 1,800. Yeah. If he has not, sir, assuming recipient has not yet claimed input tax credit. He has not yet claimed input tax credit. In that case, how much he will be able to claim? Only 16,200. He will be able to claim only 16,200. That is 18,000 minus 1,200. 1,800. Is that clear? We call this as cash discount. That is the discount given if the payment is made within some time. Or else one more discount. Let me give one more example. Quantity discount. Now, please pay attention. I am the supplier. You are the recipient. I have told you, see recipient, if you purchase more than 1 lakh units from me during the year, I will give you 10% discount. If you purchase 1 lakh units or more than 1 lakh units in a year, I will give you 10% discount. This is what the promise I have made you. So based on this, every month you are purchasing the goods. When I am supplying the goods for you in the first month, second month, I will not be knowing how much exactly you will purchase throughout the year. But at the time of supply itself, I have agreed that I will give you 10% discount if you purchase more than 1 lakh units in a year. We call it as quantity discount. Okay, sir. So it was agreed at the time of supply. So assume somewhere in the month of November, your total purchases during the year crossed 1 lakh. From April to November, you have purchased more than 1 lakh cumulatively. In that case, in the month of November, whatever you have purchased from April to November, for whatever you have purchased, assume you have totally purchased 1,10,000 units till November. I have to give discount for all the goods which has already been supplied in the past. Can I do that? Yes, you can do it by way of issuing the credit note. So I am giving the discount which was agreed at the time of supply, but after the supply. Discount is given after supply, but it was agreed at the time of supply. So supplier has to issue a credit note linking the invoice which is already issued at the time of supply of the goods each month. Plus, if the recipient has already claimed the input tax credit, then he will reverse the GST to the extent of the discount. If these two conditions are satisfied, then whatever discount you are giving in the month of November, you can reduce that much from the value of supply. See, already invoice will be issued, everything is fine. Almost tax also will be paid from the month of April, May, June and all. So in that case, that is what I told you. With respect to value of supply, we will just add and deduct the items and see. But practically how it works means the supplier would have already paid tax on that, whatever amount he has already charged. So with respect to discount, what he is giving in November, he will issue the credit note and the GST part on that discount can be availed as next month credit. Means if, for example, assume you have already paid 1 lakh tax from April to November. Okay. But GST on discount part is 10,000. So this 10,000 is like, okay, extra amount you have paid to the government. So what can you do with this? This 10,000, you can adjust it in the next month's liability. That is, when you are paying the tax for the next month or in the month of November, you can adjust that 10,000, whatever you have already excess paid. This is how it practically works. But for academic purpose, we don't talk about all those things. We just think whether should it be reduced from the value of supply or not. Will we reduce it from the value of supply or not? Clear? Practically how it works, I have told you. I repeat this, please pay attention. Now assume from April to November, whatever supply has been made by the supplier to recipient, you would have already issued the invoice and you would have already made the payment to the government, that is payment of tax. If he has collected it from the recipient, he will remit it to the government. If he has not collected the amount from the recipient, also still supplier at least has to pay out of his pocket because the due date to pay tax is within 20th of next month. So if the recipient has not made the payment within 20th of next month, still supplier has to make the payment out of his tax to the government, or else the government will start charging the interest. Clear? Yes, sir. The supplier cannot take the reasons telling a recipient has not made the payment for me still, so I will make the payment when recipient pay. No. Government will not listen to your story. If supplier is liable to pay tax, he has to pay it within 20th of next month. Whether you collect it from the recipient or not, it is your headache. You give me this much. So in that case, for example, if recipient has not made the payment within 20th of next month, what supplier will do is he will pay the tax out of his pocket and he will collect it from the recipient later. Can it happen so? Yes, it can happen. Clear? Yes, sir. So already with respect to whatever supplies has been made from April to November, tax has been made, invoice has been issued. Okay. Now the supplier is giving the discount for whatever purchases are made by the recipient from April to November. So with respect to this, invoice cannot be altered. So what will the supplier do? He will issue a credit note. So assume the credit note is issued for 50,000. On that GST amount is 5,000. So this 5,000, if I have already paid to the government, means for whatever supply has been made. So this 5,000 can be claimed as a credit, means I can adjust it against next month's liability and pay only the remaining amount, guys. Clear? But I should make sure that recipient has reversed this 5,000. If he has already claimed the credit, he has to reverse this 5,000. Sir, when the recipient will claim the credit, input tax credit and all, we will be learning in the next chapter. Next chapter is all about input tax credit. Clear, guys? Yes. Hope you guys have got the clarity. See, I have explained more things, but you need not worry like so much, like practically how it works and all. You guys, if you are already done, some of you would have already done your articleship, so you will be having some idea like how exactly it works. But still, if not, you will be learning later practically how it works. I have told you because some of you might not be able to connect to it because you have not worked still. If you have already worked, yes, you will be able to connect it. Chalo guys, now we will get into the provision. And before I start, very important for the students, sir, is this chapter important for the exam? Yes guys. So on this topic, that is value of supply, question is asked in each attempt. Every attempt the question is asked. Clear? Sir, how much? See, in few attempts they have asked for 5 marks, and in few attempts for 4 marks, and in one attempt, I guess it is in June 21 exam, they have asked it for 14 marks. 14 marks. That is for 5 marks 2 questions, and for 4 marks 1 question. Totally they have asked 3 questions. So anything can happen guys. So there is no definite trend like, okay, on this topic or on this chapter every year they're asking question for this much, or for every attempt they're asking question this much. There is no definite trend at all. So as I see, for part 1, which is indirect tax loss in your paper 2, the marks weightage is 70 marks. That's all. Okay, they are not told, okay, chapter wise how much marks will be asked, how many questions will be asked. Institute has not given any definite trend on that. So whatever I tell also is based on the past exam trend. Clear guys? So again I repeat, so on value of supply topic, question has been asked in every attempt guys. Clear? And we will be discussing those problems at the end after we discuss the provisions. Sure, we'll get into. We have understood the meaning of term supply. We have also understood the time when tax becomes payable on taxable supply. However, and one more thing guys, some of you might still be having doubt. So I've just explained the concept. We will go through the provisions and again I will be explaining it. So just hold on. So I know few of them still might be having some doubts. So I hope by the time I complete this provision, you will be cleared with your doubts. Chalo. We also understood the time when tax becomes payable on taxable supply. That is, we have discussed time of supply. However, the calculation of tax requires a value on which tax rate is to be applied. Thus, the concept of valuation is always of paramount importance in any tax legislation. So even if you recall section 9(1), which is under CGST Act, tell CGST would be levied on all intrastate supply on the value determined under section 15. Under section 15. So GST would always be levied on what? Value. And value is calculated as per which section? 15. Clear? That is what we are learning now. How to determine the value of supply on which GST would be levied. Chalo. Value of taxable supply, section 15 of CGST Act 2017. See guys, if you learn this properly, it will to some extent it will also help you to for customs topic. Okay, because under customs also we learn how to calculate the value on which IGST would be levied, because in case of import and export, interstate supply, it is treated as interstate supply, and especially on import IGST is levied because export is treated as zero rated supply, so it is tax free, whereas for import something called as IGST would be levied. So with respect to import, export and all, we would be learning it in the customs topic. Once we are done with GST, even customs is a part of indirect tax for us. In indirect tax, which is for like approximately 10 marks. They're asking customs topic in the exams for 10 marks. So GST would be for 60 marks and customs for 10 marks approximately, guys. Clear? So this is what they are doing it from the past exams. Clear? So first we will complete completely GST provisions. Once we are done with GST provisions, we would be doing customs. Clear? At the end. Chalo. So value of taxable supply, section 15. Section 15 of CGST Act, when read in conjunction with CGST rules. So in this chapter, we will also be reading few CGST rules. States that value of taxable supply under GST is the transaction value. So what is the value of supply? Transaction, just a second. What is the value of supply? transaction value. And what is transaction value is given in section 15 subsection 1. So what is transaction value, guys? Come on. Price actually paid or payable for the supply of goods or services or both. Okay. So 15.1 first point is price actually paid or payable for the supply of goods or services. Okay. And who is paying it? I am not bothered. Whether recipient or third party, anyone can pay it. Okay. Next, where the supplier and recipient of the supply are not related. Means supplier and recipient should not be related. Okay, sir. Next, price is the sole consideration. That means the money should be the sole consideration. Price here means money. Money should be the sole consideration. That means the consideration should not be in kind or it should not be in non-monetary form. Clear? If all these three conditions are satisfied, then we will apply section 15 and calculate value of supply. Value of supply will be calculated as per section 15. Sir, what if any of these conditions are not satisfied? For example, supplier and recipient are related. Supplier and recipient are related. And what is related? We have already covered it, guys. When we were doing schedule 1, okay, para 2 and para 4 talks about related persons. Agree, and distinct person. We have covered who is related, what is distinct person. We have already seen it when we were doing schedule 1. Agree. You can just go back and cross check there. Who all are related? Just a thing like employer, employee is related. Then if one person is the officer or director of another business, they both are related. If one person is controlling the other, they both are related. Or if two persons are controlled by the third party, they both are related. All three are related. Or if we both are controlling the third party, we all three are related. Something like that. See, this is what the related person. Clear? So if supplier and recipient are related, then we cannot calculate the value of supply as per section 15.1. Okay, sir. Next, if price is not the sole consideration, for example, there is a barter, there is an exchange system where the price is not the sole consideration. In that case, you cannot determine the value of supply as per section 15.1, guys. So in that case, what should we do, sir? There are some valuation rules given. We need to refer it to that, which we would be seeing it in the next class. Valuation rules, we would be learning it in the next class. Clear? So today, whatever we would be covering it, section 15.1, 15 subsection 2 and 15 subsection 3, and we will also do the problems, whatever is asked on section 15. Clear? Only when you cannot apply section 15, we will go to valuation rules. We will go to valuation rules. And I have told you, when we cannot apply section 15 is when supplier and recipient are related or price is not the sole consideration. Example, exchange, barter or anything like that. Clear? Where the price is not the sole consideration, there is something given in kind or which is non-monetary. So in that case, we cannot apply section 15. We will go to straight away to valuation rules, which is given under CGST rules 2017. Chalo. So transaction value or value of supply will be the price, whatever is charged by the supplier to the recipient, plus inclusions under section 15.2 minus discount under section 15.3. So inclusions under section 15 means there are totally 5 inclusions which are given under section 15.2. I discussed about that now, subsidy, interest, then incidental expenses and the supplier's liability paid by recipient, those items. Then coming to discount, there are 2 types of discount. We will see as per section 15.3 whether we can reduce it or not. Clear, guys? So this is the value of supply as per section 15. And provisions of value of supply under CGST Act have also been made applicable to IGST Act via section 20 of CGST Act for interstate supply. As I told you, there is one section called section 20 under IGST Act. They have clearly told if any provision is not separately covered under IGST Act, then whatever is covered under CGST Act as it is applicable for interstate supply under IGST. That is what they have told. So section 15 talks about value of supply, which is applicable for both intrastate supply as well as interstate supply. Same thing even for time of supply provisions, guys. Yeah, yes, sir. Now, see some important terms we need to understand. That is like related persons, which we have already covered in schedule 1, and I also told you who all are related. Just now I just try to do the recap. Then the price should be the sole consideration. Now what is consideration? We'll try to understand that. Consideration is defined under section CGST under section 2 clause 31. What is consideration as defined under section 2 clause 31? We will see. Consideration in relation to a supply of goods or services or both includes any payment made or to be made. Any payment made or to be made in the future, whether in money or otherwise. Means consideration can be in both. See, here the point is consideration should be in money or price. But consideration definition is telling consideration can be in any form. No problem. Even if it is in kind also, it is consideration only. Clear? Yes, sir. So any payment made or to be made, whether in money or otherwise, in respect of or in response to or for an inducement, that is to do something, of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by central government or state government. So consideration will not include subsidy given by central government or state government. And consideration can be paid by the recipient or any other person. Any other person means who will pay, sir? Simple. See guys, I have supplied the goods to the recipient for 1 lakh. In maximum cases, who will pay tax? Recipient. But for recipient, assume there is a person called Shreyas. So Shreyas is a person who is liable to pay to the recipient 1 lakh rupees. So what recipient told is, hey Shreyas, you are the third party. Agree? Anyway, you are supposed to pay me 1 lakh. Nah? You directly pay it to the supplier. You directly pay it to the supplier. Can this happen? Yes, it can happen. Practically possible. Agree? In that case, the consideration is flowing to the supplier from whom? Not from the recipient, from the third party. From the third party. So can we consider that also as consideration? Yes. But still, the third party is paying it. But it is as if the recipient is paying to the supplier, because who had the liability to pay this amount? Recipient. But he might not be directly paying it. He is asking the third party, Shreyas, to pay it. But no problem. Who is assumed to be paid by this? That is the recipient. It is understood that recipient has paid it, even though it is coming from third party. So consideration can flow from the third party. No problem. Clear, guys? Yes, sir. Okay. Next, second point here. The monetary value of any act or forbearance. Monetary value of any act or forbearance means I have agreed to do something. Forbearance means I have agreed not to do something or tolerate something. That is also consideration. Agree. For example, assume you are doing your articleship. So after completion of your articleship, your principal or your boss told, hey, you don't practice in my area, and don't practice in my location where I am having office. I will pay you something called as non-compete fee, which is 1 lakh rupees. 1 lakh rupees. So your boss is paying you 1 lakh rupees. For what? Not to do something. That is not to practice in this area or in this location. Agree? So you have agreed not to do something. So that is also consideration. Agree? So you have agreed not to do something for which he is paying you 1 lakh. So there is the consideration flowing from both the angle. Clear? Yes, sir. And if I have agreed to tolerate you, even in that case, that is considered as consideration. Please, for example, you are making a delay in payment. I am charging interest, late fee, penalty. Why? Because I am tolerating your delay. That is why. Clear? Sure. The monetary value of any act or forbearance in respect of or in response to or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by central government or state government. Clear? Yes, sir. So actually, just a second. Only these points are different. Other things are as it is for both the points. In response of, okay, in response to or in response of. Till there only the 2 points are different. After that, almost everything is same, guys, under both the bullet points. Clear? And there is one proviso under definition. Provided that a deposit given in respect of the supply of goods or services or both shall not be considered as payment made for such supply unless the supplier applies such deposit as consideration for the supply. Sir, what is this? See, now supplier has made a promise that I will supply some goods to you in the next month, for which recipient has given some advance or deposit of 10,000 as a security. So now advance is received in this month only. Advance is received in this month only. Can we consider it as a consideration and decide time of supply? No, no, no. Yeah, it is not a consideration. When it is considered as consideration is only when the supplier adjusts it against the supply which he will be making in the future. That is in the next month. So deposit, if any deposit is given by the recipient to the supplier for which the supply will be made in the future, it will not be a consideration, but it will be a consideration only when the supplier adjusts it against the supply. And with respect to time of supply, we have seen if any advance is received for the goods, we will ignore it. The supplier did not pay any tax, but for services, date of payment is considered. So if any by chance, if the service supplier is receiving any advance, then date of receipt of payment will be the earlier date. So that will become the time of supply. So should he pay tax? Yes, he may end up paying tax on it. Clear? So please be careful. Advance is covered only for services, but not for goods. But here in consideration definition, they are clearly telling advance or deposit will not be considered as consideration until it is adjusted. Until it is adjusted. Clear? So these two things are little contradicting, because for services under section 13 they have told services, for services if any advance is received it is taxable because date of receipt of payment will be earlier, and here they are telling it is not a consideration till you adjust it in the future. Yeah, yes sir. So consideration told, consideration can be in money or not in money, it can be in monetary form or non-monetary form, but here 15.1 is telling only if the consideration, if price is the sole consideration, we will calculate the value of supply as per section 15. If not, we will go to valuation rules. If price is not the sole consideration, then we will go to we will go to valuation rules. Is that clear, guys? Yes. So please be very careful. Section 15 is applicable only if all these three conditions are satisfied. Even if one condition is not satisfied, we have to straight away go to valuation rules. Clear? Yes, sir. Chalo guys. Now we are entering into a important point. 15.2. 15.2 and 15.3 are very important, guys. You need to remember it along with the clause. 15.2 A, B, C, D, E, and 15.3 has two clauses. So you try to remember along with the clauses. Very, very important. As I have told you, they're asking question on this topic in each and every attempt, and questions on asked on this one. Important area. Let us discuss it. Inclusions in determination of value of supply as per section 15.2. So there are totally 5 clauses, A, B, C, D, E. These are the clauses. So please try to remember along with the clause numbers. First one, A. Any taxes, duties, cess, fees and charges levied under any law for the time being in force other than this act, that is CGST Act or SGST Act or UTGST Act and GST Compensation to States Act, if charged separately by the supplier. Means if any tax is levied under any law except under GST, if it is separately charged by the supplier to the recipient, add it to your value or add it to your price to get value. Yeah, so we have discussed price, whatever is charged, plus inclusions, plus minus discount will give you the value of supply as per section 15. So we are discussing now what to add as per section 15.2. Examples I have given you: municipal tax on goods, excise duty on tobacco, entertainment tax levied by local authority, or one more example, if taxi owner charge toll tax in a bill, GST will be charged on the value including toll tax. For example, assume taxi owner, you have hired a taxi for which the taxi charges are 5,000 plus is also charging you toll charges or toll tax 500. So what is the value of supply, guys? 5,500. Value of supply would be 5,500 on which the supplier is liable to pay tax. Supplier is liable to pay tax. Next, Note, there is a note. So please be careful. Any tax which is levied under other law, not under GST. So if there is CGST, SGST, UTGST or IGST or compensation cess which is charged by the supplier to recipient, don't add that, because value of supply, why are we calculating? To calculate what is the GST amount. Agree? So before calculating the value of supply, don't add GST part. Okay, sir. Note, a clarification has been given by the CBIC by way of the circular. What is it? The CBIC has clarified that for the purpose of determination of value of supply under GST, tax collected at source, that is in short TCS, under the provisions of Income Tax Act 1961 would not be included, as it is an interim levy not having the character of tax. That is, under income tax, TCS is collected on few transactions. That is, seller will collect it from the buyer. In addition to the consideration, whatever the seller is charging to the buyer, you will collect something called as TCS. Agree? You would have learned this TCS concept in your executive level. So the seller is collecting it from the buyer in some special cases. So in that case, if TCS is collected under income tax law, will we add it to the value of supply? No, don't add it. Because seller is collecting it from the buyer, but still it is having a character of interim levy, because normally TCS is collected not as a tax collection, just to track the transactions. Just to track the transaction, because when TCS is collected on a transaction, those transaction has to be disclosed in your income tax returns. That income, that particular income, you cannot escape from it. Agree? So just to track the transaction, TCS would be collected from the seller from the buyer. Agree? So it is not a tax, actually, means it is not a tax payment, because TDS or TCS, which is deducted or collected on your income, you can reduce it. Means once you calculate your final tax liability before you file your income tax return, if any TDS or TCS is there, you can reduce it from your tax liability and pay the balance to the government. Agree? So that is what TCS, we call it as interim levy. Yeah. So in simple, TCS, if it is collected under income tax law on the transaction from the supplier, by the supplier from the recipient, we should not add it while calculating the value of supply. And there is a question on this which is asked in the exam, guys. We will do that later. Okay. So clause A is done. Coming to clause B, any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and not included in the price actually paid, or payable for the goods or services or both. I gave this example. Now, supplier is charging to the recipient only 1 lakh, but supplier was supposed to pay 20,000 to other person, which is asking recipient to pay. It. So in that case, it is indirectly like supplier is charging it to recipient. Na? So what should we do with this 20,000? We have to add it to the value of supply. So if the liability of the supplier is paid by the recipient, we have to add it to the value of supply, guys, as per clause B. Okay. Next, coming to C. Any incidental expenses, including commission and packing, charged by the supplier to the recipient of the supply, and any amount charged for anything done by the supplier in respect of supply of goods or services or both, at the time of or before the delivery of goods or supply of services. So anything which is charged by the supplier to the recipient before the supply of goods or at the time of supply of goods has to be added to the value of supply, guys. For example, I gave you packing expenses, packing charges. Similarly, assume supplier is arranging for the transportation of goods from supplier's place to recipient place, for which supplier is charging 25,000 to the recipient. So should it be added to the value of cost? Yes, it has to be added. Some example: inspection or certification charges, installation and testing charges, loading charges, designing charges, etc. Means simple, guys. Anything which is charged by the supplier to the recipient separately on or before the supply is it has to be added. We call it as incidental expenses. Okay. D, interest or late fee or penalty. In short, you can call it as IPL. Interest, P for penalty, and L for late fee. Okay. For delayed payment of any consideration for any supply. Should we add it? Yes. And what is time of supply for this? We have learned in section 12 subsection 6 or section 13 subsection 6. Agree, which talks about addition in value. Yes, sir. So that is with respect to time of supply. Here we are discussing about value of supply. Should we add interest, late fee and penalty to the value of supply? Yes, sir. Which is charged. And here also interest, late fee, penalty is charged from whom to whom? Supplier to recipient. Clear? Because if you don't pay tax on time, if you don't file the returns on time, even department will charge you the interest, late fee, penalty and all. That is a different story. We will take care of it later. But whatever we are discussing here under section 15 to clause D is the interest, late fee, penalty which is charged by the supplier to recipient. Same thing with respect to whatever we have discussed in 12.6 and 13.6. Next, last point, E. And please be careful, for interest, late fee and penalty, I told you, you have two options. You can consider it as inclusive of GST, or you can also consider it as an exclusive of GST. If you consider it as an exclusive of GST, no problem. Straight away, whatever amount is there, you will add it to the value. But if you consider it as an inclusive of GST, you need to do some reverse working to know what is the value before GST. Agree? And please give a note, whether you are considering it as inclusive or exclusive, whatever it is, give a note for interest. Yeah, whatever you are considering, give a note. But I suggest you to consider interest, late fee and penalty always as inclusive, guys, because normally when supplier is collecting interest, late fee, penalty and all, he will not charge extra GST on it. He will consider that whatever amount I am charging now, it is inclusive of GST and he will collect it. Clear? Yes, sir. Next, E. Subsidies directly linked to the price, excluding subsidies provided by central government and state government. So subsidies provided by anyone other than central government or state government, which is directly linked to the price. Supplier is charging less price to the recipient. Why? Because he is getting some subsidy from others. So that is where we call it as subsidies linked to the price. Okay. If it is received from central government, state government, don't add it. If it is received by others, add it. Example. Okay, first explanation. Explanation has been given to clause E. For the purpose of this subsection, the amount of subsidy shall be included in the value of supply of the supplier who receives the subsidy. Who is receiving the subsidy? Supplier. And if it is linked to the price, add it to the value of supply for that particular supplier. Yeah. Example for subsidy I have given here. The selling price of a notebook is 50. So normal selling price of a notebook is 50. For notebooks sold to students in government school, a company uses its CSR funds, that is corporate social responsibility funds, to pay the seller 30 rupees, so that the students pay only 20 rupees per notebook. So for the supplier, a company is giving its CSR fund out of that 30 rupees for each notebook, so that the supplier will sell the book only for 20 rupees to the government school children. So in this case, who is giving the subsidy? A company, which is not a central government or state government. Okay. Is the subsidy linked to the price? Yes. As the subsidy is given to the supplier, he has reduced the price. So is it linked? Yes. So in that case, what is the value of supply here? 30 plus 20. That is 30, which is price charged by the supplier to recipients, students, plus 20 subsidy. The value of the notebook will be 50 as it is the non-government subsidy. If the same subsidy is paid by the central government, means in the case, instead of company, if government is giving that subsidy, then 20 rupees has to be should not be added. So our state government, the value of notebook would be 20 only. 20 only. Yeah, that is the price charged. Here in this case, the price charged by the supplier to the recipient is 20. Okay. Check whether subsidy is given by non-government. If yes, if it is linked to the price, add that. If by chance, if the subsidy is given by government, don't add it. In that case, what is the value of supply? Straight away 20. Yeah. Or, sir, subsidy I have received from non-government, but it is not directly linked to the price. In that case, you can straight away take only 20 again. Yeah. Yes. And in the question, you need not worry. In the question, there will be clear-cut instruction, whether it is linked to the price or not. Some hint at least they would have given it. Okay. So we have covered 15.2. There are totally 5 clauses here, guys. Just a shortcut to remember this. See, A. A starts from any tax. So A is the first alphabet. So clause A is for any taxes. So A for any tax. Okay, sir. Okay, just a shortcut to remember. B. Coming to B. The liability of the supplier is paid by recipient. Liability of the supplier paid by the recipient. So liability. So B. Clear? So liability of supplier paid by recipient. So liability B. Somewhere there B is there. So we can stress on that. So B is for liability of supplier paid by recipient. Okay, sir. So there may not be so big logic here, but still guys, just a shortcut for you. So it will be helpful for you to recall, because I told you need to remember this along with the clauses. Okay, so important. Now come into C, which talks about incidental expenses. Incidental expenses. So spell C for incidental. Yeah. Okay, sir. Next, D. Interest or late fee or penalty. When it will be charged? When there is a delay. When there is a delay. Whenever there is a delay, interest IPL will be charged. Agree? That is interest, penalty and late fees. So D for delay. D for delay. Okay, sir. Next, coming to the last one. E. Subsidies. When will anyone give subsidy to you? When they are interested in you or in your business. E. Like interest may start from I, no problem, but still E. Subsidy. Subsidy. E. Agree? So you can remember like that. Subsidy ends with E. So like how you pronounce it. So subsidy for E. Clear? Huh? Or else you can also remember. Subsidy is given by the person who is having interest. So E. E for interest. It may start with I, but still pronounce E. Clear, guys? Yes, sir. So try to remember like this so that it will be easy. See, initially you may require this kind of shortcuts for you to remember the clauses. But once you practice it again and again, guys, like 3 or 4 times, try to recall it. Study 15 to once and just have a walk and try to recall whatever you are studying. Okay, clause A, what is telling? Clause B, clause C, clause D, clause E. So try to remember like that. Try to recall like that. You will be able to get it, guys. Only initially you require some shortcuts. Later on, you will only be able to retain it in your head or in your mind. Is that clear? To some extent, I have developed some shortcuts which I will be sharing with you so that it will be helpful for you, at least in the initial stage. Chalo, guys. Next, 15.3. Exclusion in determination of value of supply. So two things can be excluded. Both talks about the discount only. There are 2 clauses here, 15.3a and 15.3b. 15.3a is easy. B only, we need to check the conditions. So 15.3a, any discount which is given before or at the time of supply, if such discount has been duly recorded in the invoice issued in respect of such supply. So what is this discount? We call it as trade discount. You need not write it in the exam that it is a trade discount, cash discount, quantity discount and all. I'm just giving the example. Yeah. So if any discount is given at the time of supply and if it is recorded in the invoice, less discount, you would have seen in many places when you purchase something on a discount, they would have recorded it less discount at 10%. They will reduce that value and give the remaining amount. You need to pay that amount. Yeah, same. So discount which is given at the time of supply will be recorded in the invoice. Only then it can be reduced from the value of supply. Okay, fine. Next, B. Any discount given after the supply has been affected. So this discount is given after supply, but 2 conditions. Both these conditions has to be satisfied, because in between this there is and. Whenever there is an and, interpretation of status, come on, both the conditions has to be satisfied. If it is or, any one can be satisfied. Okay, first, what is the first condition? Such discount was known and agreed at the time of supply. Okay, it was agreed at the time of supply only. Discount is given later, but it was agreed before only. Okay, that is established in terms of an agreement entered into or at before the time of such supply at specifically linked to relevant invoice. I gave an example. Sir, discount of 10,000 is given later. For that, credit note will be issued, but that should be linked to the invoice for which you are giving the discount, because that supply has already taken place. Invoice is also issued. I cannot alter that invoice. So what you will do? Issue a credit note and link that to the particular invoice. So you are giving discount with respect to which invoice? You should be able to link it. Okay. Okay. Next, input tax credit as is attributable to the discount part on the basis of a document issued by the supplier has been reversed by the recipient of supply. So on the basis of document issued by the supplier, the recipient, if he has already claimed input tax credit on the tax part on the discount, he has to reverse it. So your document means credit note, guys. Credit note. In the law, they have not used credit note in the section. Actually, I'm just telling it. Means they are told on the basis of document issued. So what is credit note, debit note and all? We'll be learning it in the invoice chapter. Clear, guys? Yes. So document issued in case of discount is given by the supplier to the recipient is credit note. Fine. So if both this condition is given, satisfied for the discount which is given after the supply is made, that amount of discount can be reduced while calculating the value of supply, guys. Can be reduced while calculating the value of supply. Clear? So I have told you, see, please be careful. Don't break your head. How it works practically and how we are doing academically is a bit different, because here we will not be like, will not be issuing credit note, like how it should be linked and all those things and all is not covered. So you need not worry. They will just ask the question, like practical question. They will ask you the problem to calculate value of supply, where you will just decide which all items has to be added as per section 15.2, and if there is any discount, can we reduce it from the value as per section 15.3. That is what you will decide it. Yeah, especially with respect to the discount which is covered under section 15.3b, please be careful, because that discount we will reduce only if the two conditions are satisfied. Yeah, yes, so we will do the problems after discussing this. Yeah. So some circular has been issued by the government or the department to clarify few things with respect to the discount. We will see that allowability of certain specific types of discount offered by the suppliers as clarified wide circular number 92/11/2019 GST dated 7th March 19. First one, staggered discount, buy more, save more offers. So they would have given, you would have seen, especially in this brand factory or any other shopping mall and all, it will be like buy for 5,000, get 20% discount. Buy for 10,000, get 30% discount. So if you buy more, they will give you more discount. Agree? So what is it? In cases of staggered discount, we call it as staggered discount. Rate of discount increases with increase in purchase volume. For example, get 10% discount for purchase above 5,000, 20% discount for purchases above 10,000, and 30% discount for purchases above 20,000. And such discounts are shown on the invoice itself. Such discounts are excluded to determine the value of supply, because this is a discount which is given at the time of supply only. This is not the secondary discount which is given after supply. Clear? Because when you go to any shopping mall or brand factory and all, they will not tell you, okay, throughout the year, if you purchase more than this, we will give the discount. No. In one purchase, that is, if you purchase today in one bill, if you bill for more than 5,000, you will get this much discount. That is what they tell. Agree? So in that case, discount is known at the time of supply only. So it is recorded in the invoice. So it is if it is recorded in the invoice, it is covered in which point? 15.3a. So can we reduce it? Yes, sir. You can reduce it. Next, periodic, next type of entry or discount. Periodic or year-ending discount or volume discount. So what is this? This is different. Don't get confused with staggered discount and this one. These discounts are offered by the supplier to their stockist, etc. For example, get additional discount of 1% if you purchase 10,000 pieces in a year. Not in one shot, in a year. If you purchase more than 10,000 pieces in a year, you will get additional 1% discount. Okay. Get additional discount of 2% if you purchase 15,000 pieces in a year. Such discounts are established in terms of an agreement entered into at or before the time of supply, though not shown on the invoice, as the actual quantum of such discounts gets determined after the supply has been effected, and generally at the year end In a commercial parlance, such discounts are colloquially referred as volume discount. We call it as volume or quantity discount. Such discounts are passed on by the supplier through what? Credit note. That is the document which will be issued by the supplier to the recipient. Because, see guys, here discount is agreed at the time of supply. Supplier has told, if you purchase more than 10,000 pieces in a year, you will get 1% additional discount. Okay. So at the time of purchase, we don't know exactly whether you will purchase throughout the year more than 10,000. So assume in the first case, he purchased 1,000 units, next 2,000 units, next 2,500 units. So whenever you are purchasing first, second and third time, I would have charged normal price for you and I would have issued invoice for you. But once your purchases during the year crosses 10,000, you are eligible for 1% additional discount. So that 1% additional discount will be given from the first purchase. So in that case, for whatever discount I will give with respect to which the supply is already made and invoice is already issued, what do I issue for you? Credit note. I will issue credit note for you. Clear? Yes, sir. So this discount is covered under which section, guys? 15.3B. Yeah. Next paragraph. Such discounts are excluded to determine the value of supply, means we will reduce it, provided they satisfy the parameters laid down in section 15.3B of the CGST Act, including the reversal of ITC by the recipient of the supply as is attributable to the discount on the basis of document issued by the supplier. And what document? Credit note. So recipient, if he has already claimed input tax credit, with respect to the discount part, he need to reverse it. Okay. Example. I have given an example here. The agreement of Raju Electrical Appliances with its dealers is that purchase of rice cookers over 1,000 pieces in a Diwali month will entitle them to a discount of 5% per cooker. Means if more than 1,000 cookers are purchased in a month, that is Diwali month, a 5% discount will be given per cooker. Okay. Therefore, the quantum of discount can be determined only at the end of Diwali month. However, since the agreement relating to a discount was in existence at the time of supply and discount can be worked out for each invoice, such post-supply discount, that is post-supply means the discount which is given after the supply, but it was agreed before supply, will be allowed as a deduction from the value of supply of rice cooker. Raju Electrical Appliances can issue a credit note for 5% of the value of the goods along with the GST and claim adjustment of excess tax paid. Means they would have already paid the excess tax. So can they claim the adjustment of that? Yes. Can they claim the adjustment of that? Assume on that 5%, Raju Electrical Appliances, they have already paid 2,000 tax. So what they can do is, they can claim that 2,000 and adjust it in the coming months against their tax liability. So they can claim the adjustment of excess tax paid, means that is what the meaning. Okay. The dealer must reverse the proportionate input tax credit, that is the recipient, on the relevant stock to bring in the line with reduced tax. Now, what is the excess tax paid by the supplier? 2,000. So he is claiming the adjustment of that. So recipient cannot claim input tax credit of it. Okay. So the recipient, if he has already claimed the input tax credit of it, he has to reverse it. Fine. Yes. And normally this quantity discount, year-end discount and all will be given by the manufacturer to the wholesaler or from the wholesaler to retailer, guys. Clear? Normally this will not be given to the ultimate consumers like you and me. Fine. Yes. Next, coming to C. Secondary discounts. Because what happened now? Bulk purchase and all will be done either by the wholesalers or retailers. They do bulk purchases. So for them, a quantity discount will be given. Yeah. Coming to the third one, secondary discounts. These are the discounts which are not known at the time of supply or are offered after the supply is already over. That is, it was not agreed at the time of supply. So can it be reduced? No, because 15.3A also is not applicable, 15.3B also is not applicable, because this is a supply which is given as a surprise package. It was not agreed. It was not agreed at the time of supply. For example, A supplies 10,000 packets of biscuits to B at 10 rupees per packet. Afterwards, A revalues it at 9 rupees per packet. Subsequently, A issues a credit note to Mr. B for 1 rupees per packet. So this is like a surprise discount given by the supplier A to B. So was it agreed at the time of supply that I will give discount? No. So can we reduce it from the value of supply? No. So such secondary discount shall not be excluded while determining the value of supply. As such, discounts are not known. They were not known at the time of supply, and the conditions laid down under section 15(3)(b) of CGST Act are not satisfied. So it may be noted that financial or commercial credit note can be issued by the supplier. So in this case, yes, supplier will issue credit note, but still he cannot reduce it while calculating the value, even if the conditions mentioned in section 15(3)(b) of CGST Act are not satisfied. So just because you cannot reduce this discount from the value, it doesn't mean that the supplier should not issue credit note. There is a mandatory that whenever the supplier is giving discount to the recipient, he has to issue credit note. Whether he can reduce it while calculating the value or not, that is secondary. Supplier has to issue credit note or else he will be penalized under the law. Clear, guys? Yes. So these are the different types of discount which we have seen. Chalo. First discount was covered under 15(3)(a. Second discount was covered under 15(3)(b)(a). Third was not covered under both. Yeah. So this is all about section 15(1), 2 and 3, guys. So we have covered 3 sections. 15(1) talks about price, which should be like 3 conditions they have given there. If all those 3 conditions are satisfied only, we will apply section 15. And whatever price is there as per section 15(1), we will add inclusions. There are totally 5 inclusion. Only if it is there, we will add it. For example, there are totally 5 items given here. Assume none of these items are given in the question, we will not add anything. Assume supplier has charged 1 lakh to the recipient straight away. No more expenses, nothing. Only 1 lakh. There is no subsidy, there is no interest, there is no expenses, nothing. So in that case, we will not add anything as per section 15(2), because whatever is given in 15(2), if any of these items are there, add it while calculating the value of supply. If it is not there, ignore it. That's all. Yeah. Okay, sir. So totally 5 items are there as per section 15(2). If there is any item which is covered under section 15(2) clauses A, B, C, D, E, add it. If not, forget it. Next, coming to discount. If there is any discount which is covered under section 15(3), there are 2 discounts which are covered here. Then if it is covered and if the conditions are satisfied, reduce it while calculating the value. If not, don't touch it. Clear? And to the extent possible, for all these points, especially inclusions and discount, guys, whatever adjustments are given in the questions, whether you are adding it or reducing it, please give a note. Try to give a note for it. At least like 2 to 3 lines note, including the section numbers. So please remember the section numbers, because at least in the notes, why you have added or why you have reduced or why you are not adding, you need to give an explanation in the notes to the problems. Normally problems are asked on this topic. Calculate the value of taxable supply in the given problem, or from the following information they will ask it. We'll be solving it. So this is all is covered in section 15(1), 2 and 3, guys. So we will close this video here and we will do the problems on this section 15 in the next video, guys. Until then, take care all of you.